It's a trap!
I recently went over how you don't need a prop firm for funding if you're ready to trade futures and have $2,000 or so of risk capital, meaning money you can truly do without in the near and long term. If you do, you have as much buying power as a $50K funded prop firm account. So let me tell you the details of how I use a small futures account, and keep in mind that this is scalable. The SEC needs you to have $25K in funds to day trade stocks and their options, but not when you're trading futures contracts. To trade a small futures account, we'll need to be day trading with a credible discount futures broker who offers a great daytime margin rate, and we won't be able to swing trade with them unless we have a larger account. I personally use 𝗕𝗏𝗦𝗡 and NinjaTrader. They're the same company and the same broker that the prop firms use. Only my account uses real live funds in the actual market. I have no profit limits, and I can withdraw profits whenever I freaking want to. Other futures traders I know use TradeStation or AMP, but if you're already familiar with 𝗕𝗏𝗦𝗡 or NT8, it's an easy transition to Ninja. Did you know, contrary to what the prop firms might lead you to believe, that a NinjaTrader license is free if you're their customer? You get a free $50K paper account to practice on, and you can access all of your accounts through 𝗕𝗏𝗦𝗡 desktop, mobile, web, or NT8. Their data is cheaper than you think, cheaper than a prop account, and this would be a whole other video. You can share data between your different providers like TradingView, Ninja, Interactive Brokers, etc. if you want to. I started trading on their streamlined 𝗕𝗏𝗦𝗡 web and desktop software and graduated to NT8 when I was ready for automations and things. Which contracts you use and how many really comes down to your trading style, risk comfort level, and personal preference, but what I like to use is 5 ES minis or micros bought at strong support or sold at strong resistance in a favorable environment. My go-to setups can usually offer a handful of trades throughout the day and almost always in the first part of the morning session. Prop firms can be used as a tool for traders who follow a strict plan to manage their account, but that's how an extreme minority are actually using them. Those are the top 1% or so of a prop firm's clients who they're paying out 99% of their payouts to. If you're not in that group and you're throwing money at prop firms hoping that today maybe I'll get lucky and get an account passed, and if I don't, I'll only lose $40 instead of thousands. Hello, that's not trading, that's gambling. So what if you get passed to a funded account? You'll pay another larger fee, and then what? You still don't know what you're doing. It took you 20 tries to get that one account. Is it going to take you 20 more tries to keep it going for another trade? If you get the cheap accounts at $40, you've spent $800 for 20 tries plus the live activation fees with absolutely nothing to show for it. Now, would you really have lost thousands trading your own funds? Or would you have taken it a lot more seriously, taken a lot less size, and been much more responsible with the funds? I wasted money at prop firms, and it took me a while to get net positive with them, and unfortunately, a lot of traders never do because the focus is on the ever-changing prop firm rules rather than actual trading. If your goal is financial freedom, you do not want to be tied down to a prop firm. I know it can be really scary to take that first leap, but if your ultimate goal is to be funded, you can baby step yourself into a futures account with very little. What a lot of new self-funded futures traders do, and this is the mentality that I went in with, is consider their entire small futures account their max loss. Not for each trade, but a hard max loss allowed on the account. Prop firms have this with either their drawdown or the daily loss limits. You can do this yourself, and it's really a pretty good skill for a trader to have, learning to think about and manage your own risk. Yes, this is more than $40, but it's risk capital, not a lotto ticket. This is trading, not gambling. We want to learn to be able to do this every day, not just when luck strikes. and the money isn't gone forever if you're successful using risk capital. Personally, I started with $500, but found that I was really more comfortable with more. With 500, I'm absolutely limited to micros and really just a micro or two. That limited my profit potential and really didn't hold my interest much. So I ended up staying in paper trading a bit longer until I was more confident and could fund $1,500 to $2,000. This was never, ever money borrowed from my checking account that I needed to pay the mortgage or the bills, and it's not money that I borrowed from anyone or any place. The traders who have the kind of success that we want in the markets do not have that level of pressure on their backs, or they wouldn't be able to do what they do. And our goal should always be to make trading easier, not harder. Risk capital is money that you can honestly, completely afford to lose. If it's all gone tomorrow, will you be day drinking yourself sick, or is it completely available to be converted from money into trading capital? They are not the same. For position sizing, I can't think of a trader who I've spoken to with experience failing prop firms who is not grossly over leveraging their little bit of actual funds available to trade, which, to be clear, is the max drawdown, not the account size you signed up for. If you've been prop trading, you've been paper trading, not trading in a live environment, and it's different. There are so many reasons to size down here. It's your real risk capital now, you're trading instead of gambling, and it's a new environment you're trading in. My first several trades were single micros just to make sure the buttons were working right and to get a feel for the live market. And I'm sure a lot of those ended up costing me funds, but I honestly don't even remember because I was undersized for my risk comfort and using true risk capital. Then I set a goal to make $50 to $100 with some of my go-to setups. So I did the math on the MES micros and looked at how many points as a range I'm generally after and determined my contract sizing from there. Because I have a trading method where I'm trading key levels, watching order flow, avoiding news releases, and have a trade management plan, check out my channel because there are plenty of current and future videos with those details. I know how much my typical stop out costs me. This is some homework that you need to do before funding yourself. If the account can only handle a single stop out or two, I either need to size down and work on building the account or add some risk capital if I'm able. It's a little bit of math and a little bit of work, but your position size is tied to your funding and vice versa. But I'll do a little bit of math and a little bit of hard work if it sets me up for a lifetime of financial freedom. What about you? And that's why it's a marathon, not a sprint. We're building the future, not gambling it. Okay, now for the best part, is your account a grower or a shower? My personal challenge to myself when I started day trading was to completely bootstrap it from next to nothing. I started day trading out of the money index and tech options in a little cash account to avoid the SEC and built it up to $25,000. I did it relatively quickly, but I also did it with an extreme amount of time and focus that I don't ever want to do again. However, it taught me a lot about growing an account versus paying myself. Personally, I need a little treat for my efforts, even if it's just a little something. When I'm growing an account, I set a time interval, and it could be every other week or once a month, and that's payday. I feel pressure if it's more frequent than every other week personally. I just like to think longer term. I take whatever net profit I've had after commissions over that period, leave half of the profit to grow the account, and pay myself the other half. If the account is at a happy spot where that's the amount of risk capital that I comfortably need to take the trades I want to take, I'm out of growth mode and into profit mode. Then when it's payday, or if I have a windfall day, I'll withdraw the funds, and once they hit my account, it's money and I can do money things with it. Maybe it's because I've always been self-employed, but the idea of slaving away at a pretend account that can be taken away from me at any time with rules that change all the time just isn't appealing. I do have funded prop firm accounts, but I don't trade them as often as I trade my own funds and consider them an additional source of income. As extra money, they can be great, but it's not like the old days when the old prop firms had training and salaries and an office and bonuses. These internet prop firms are chasing a piece of retail trader money instead of trading for it themselves, and I want better for us. I'm working on some great strategy and trade management videos for you that should be out really soon, but feel free to drop me a line if you have any questions or if there's anything else you'd like me to cover. Love you. Bye.